if you take a look at our picks there, you won't find some of the ones that that might come to mind immediately, like General Electric, for example, not in there. But what you will find in there is a company in that portfolio called AES Corporation, and it's a major power company. Actually started up in the 1970s by a couple of academics who had the idea that by just hiring the best talent they could find, giving them the most freedom available, and just turning them loose in the world, finding a bunch of projects, they could really grow a huge company. Very successful strategy for about 20 years, and really up until early this decade, when they basically ran into the situation where they had a lot of assets they didn't really know a whole lot about, and there really weren't the internal controls company-wide to prevent things like over-leverage and overexposure to certain markets. And they had problems in Brazil, which really were tremendously damaging. And the share price went down to under $1 at one point. At that point, the two founders of the company took a step back. They're still major shareholders, but they took a step back. They decided they wouldn't be chairman of the board and CEO anymore. Instead, they hired Dick Darman, who was the late Dick Darman, actually, very well connected through the Carlyle Group, to be the chairman of the board, and Paul Hanrahan as the CEO, who's had a very strong background in accounting. So they basically got things together internally, and the proof is in the earnings results we've seen going forward. They're projecting 13 to 15% earnings growth over the next several years, simply by bringing new projects online. A lot of the early projects were coal-fired power plants and so forth. Now they're very heavily into renewable energy, and particularly in countries like China. And that's where the story really gets interesting here. The sovereign wealth fund movement around the world is the subject of an upcoming book by Yanis Mastros, one of our editors. And you'll be reading more about it in Portfolio 2020, as well as you can see his articles there. But the idea being that here you have these countries that have huge piles of capital, and they're now trying to figure out where to invest it in various areas. Well, one of the places that the China Investment Corporation, one of the most powerful sovereign wealth funds in the world, has chosen to put its money is into AES Corporation. And that's essentially buying about 15% of the stock and a share of the company's assets in China. Now, I don't know if there are many better ways of investing in China than really partnering with somebody who's very well connected. But this sovereign wealth fund, by definition, very well connected, and this is going to really open up a lot of business opportunities for AES in China. So they have the backing and a huge cash infusion from this company, from the sovereign wealth fund, the China Investment Group, and now they're going to be able to deploy that, and I think should have a much easier time on the regulatory front making that happen in China. So we could actually see an acceleration of growth there. I think the share price is very, very cheap right now. People right now, if you look around the way investors are acting, many people are very, very concerned about the way things can go. They're very concerned about the big deficits being rolled up in the U.S. They're concerned about the U.S. dollar. At the same time, they want to make back what they've lost over the past year, which I think is also an extremely dangerous strategy. And I would strongly encourage people not to think in terms of investing on deadlines. The market's not going to correspond to your schedule. The way that you beat the market, the way that you build wealth over time, is to be patient, buy good businesses, hold on as their growth moves to fruition. But and I think that that's what we're going to see with AES. But AES does have one big advantage here in terms of the situation. If we do see this easy money policy explode into more inflation, and that is they're heavily invested abroad. So if the U.S. dollar does fall in the face of inflation, that's going to be money in the bank for them, and particularly as they move heavily into China and ramp up their operations there. So again, it's very well positioned in the short term, very well positioned in the long term, and I think very cheap at the current price. So I'd invite you to take a look at the portfolio companies. It's a very very broad mix of out there, but again, what they have in common is they're all tacking, moving forward, and 2020 foresight maybe with buying some of these, with the management that they have, and I think that they're all going to build wealth over time, And again, these are the types of companies, they prove that they can transcend a terrible market. If you look at the total returns in the portfolio that are very strong, many of these companies we've held over a year. So very, very tough times over that period and some very strong returns. And again, this is what these companies have done as companies. That's what's going to build wealth for us. And again, congratulations for coming to Portfolio 2020, and I'll look forward to chatting with you next time.